Welcome to Grokchain Conversations. This podcast is presented by a multidisciplinary group of legal, financial, and technology professionals to meet and discuss today's most pressing questions around the use and governance of the blockchain. Through roundtable dialogue, we will provide listeners with a full spectrum of views on where this technology is today and where it might be leading. The information provided on the Grokchain Conversations is for educational purposes only. The information provided does not constitute legal, investment, financial, tax, accounting, or any other professionally licensed advice. The views expressed here are those of the individuals, not those of their respective employers or Grokchain.
So this week's podcast, we're going to explore business and blockchain. So, bit of context: we spoke in the last podcast about Tgrade, the blockchain that we've been working on, and the unique features that we had there about the layers of security, how it operated, the deep thought we went behind providing a basic infrastructure, and that's all very well. Like, we've built a road, a railway, tunnels, bridges, airports. You know, it's there. What's missing is businesses on there. So I wanted to explore some of the topics around why business on blockchain, and reflect a little bit on the issues that we face, the challenges that we have. And to give it context, we're going to sort of just ignore a large part of what has happened on blockchain in terms of the self-cannibalization of tokens and derivatives and all the fancy sort of ways of trading that we've seen. We'll put that to one side because that's not really related to business. What I mean by business is solving real world problems. So we have both of you here, and you'll do introductions in a second. Two businesses that are looking to solve real world problems using blockchain technology, and I think it's definitely worth a podcast to explore this and explore the issues around that. So if I could just ask for a couple of quick introductions from both of you.
Go ahead, Vlad.
Okay, my name is Vlad Lodzinski. I am, my background originally is in media and media technology. So I started out my career as a producer, which led me to setting up media businesses, TV stations, and then kind of media technology businesses for the last 15 years. I'm currently in Poland, although I'm a Brit, as you could tell. And I'm here after, I think, 12 years in California, working in Silicon Beach, working on a variety of startups. So I think Martin actually might be interesting to also touch on different regulatory markets and how they affect the business. But primarily my focus right now is on a business called Stellarator, which is building on Tgrade. We're using Tgrade as a tool. And we are Web3 B2B finance for entertainment industries, or filmed entertainment. So basically that means movies, TV, streaming shows. And there's kind of two sides to our solution, one of which is providing real world solutions to let's say a market that is still quite old fashioned in how it operates. So there's a part of our business that we call DLT on steroids, which is essentially intelligent contracts, data auditing and transparency services for the film industry. And part of the reason we want to do that as well is to digitize the workflow and finances of movies and help create very robust and data-rich asset-backed tokens and other forms of digital ownerships. So I think that's a summary for now.
Very nice wrap up.
Thank you.
Alessandro?
Right. So I'm Alessandro Daliana. I am originally a businessman. I worked with many consumer-facing companies, primarily in Europe, as well as logistics and transportation. I also dabbled a bit in biotech and information technologies over the years after leaving the corporate world. And for the last 6 years, I've been working with companies in the crypto space. As a business person, the attraction that I have for crypto is our productivity gains. The idea that a small team of people can create so much economic activity, so much value using information technology, that they can attract literally millions of dollars in assets to secure a network and its activities, and use this system through standardized contracts is quite fascinating. Together with a team of other people, we started exploring the use of smart contract technology for last mile delivery, and we launched a project called Figaro that runs on Tgrade.
Fantastic.
Sounds exciting.
So the
It
first thing
is.
I'd like to explore is you both come at this at slightly different business cases, whatever. But what's interesting or fascinating about both the projects that you're embarking on is you're not taking an existing business and putting it on blockchain for some kind of efficiency gain. You're actually rethinking how your particular area of business is done using this technology. And I think that's really something I'd quite like to draw out in the discussion about how you approach this. So maybe we'll start with Alessandro on the last mile. You know, it seems, you know, what you produce with the first ideas, the prototype, the proof of concept, it's a really elegant way of looking at it, but I think it takes some special skills to actually pull everything apart of how it's currently done and put it back together with the blockchain. So what was your approach? How did you go about you know, coming up with those ideas of how you could use smart contracts in that way?
Well, first of all, it took a lot of study because blockchain is just, as a business model, it's just not easy for someone who comes from traditional business to understand. How the software actually works for a general purpose blockchain, like Tgrade or Bitcoin or Ethereum or Cosmos or whatever, they're just general purpose blockchains. You can, when you're in a smart contract environment, you can make that general transaction, that general purpose, into a more specific purpose. But the business model itself of those general purpose blockchains is what attracted me to the technology. I was like, well, it didn't conform with my understanding of business and how business is conducted around the world, which is based on property and wrapping it up in this legal structure, having someone who controls it on top, or a board, owners who are then going to exploit it and develop products and services from this productive asset. This is a completely different business model. And the assets are on the outside. They're not necessarily in a legal wrapper in this economic system. They're, we'll say, controlled by software. And regardless of where you are in the world, the terms and conditions that asset providers will be paid and compensated for their work is consistent. Doesn't matter where you are in the world, you'll be paid at the same terms and conditions, which, intellectually speaking, is kind of cool, right? It's kind of an exciting idea. So in the industries that I've worked with, most of them were consumer facing. Most of them had a supply chain component to them. And they had the, we'll call it the last mile delivery problem. All businesses seem to have this last mile delivery problem when they're consumer facing. So the the challenge that that was faced was, how do you create a standardized contract so that anybody in the world, regardless of where they are, can interact with this contract, can bring their asset, whether it's a car, a bicycle, a truck, or their feet, it doesn't make any difference, right? To make a delivery. And with Fabrizio, we spent about 2 years working on this. We actually started off trying to figure out how Unilever could use the blockchain to deliver ice cream from kiosks in Turkey and at the beach. People walking down the beach, because back in Europe, you have a lot of people who are vendors on the beach. And how can you use the blockchain? How can you give them ownership? So it then evolved into last mile delivery, because it became a general purpose application, which we decided to apply to food. But coming up with that idea of how to make it as standardized as possible so that anybody could use it at any particular time, any place in the world, was quite challenging. And we actually had to, it was when we thought about it from a proof of stake perspective that ensured the security of the contract that things started to gel.
Interesting. Yeah. So this was the use of escrows to hold money back until services were delivered, right?
Yes.
Yeah.
It's,
okay.
and, if you think about it, unfortunately, I always have to go back to history. But, if you think about it from a historical perspective, that's, when people were shipping goods, even with, a cart and a donkey, the risk of partial or total loss wasn't the big risk.
Mm-hmm.
So how do you cover that risk using smart contracts? So the simplest way, which Fabrizio came up with, was to use an escrow system. But as the network develops and you have more sophisticated types of deliveries, there's no reason to not think that you can have a full-fledged insurance system that's actually built into the contract.
Yeah, interesting. So how does that compare with your approach, Vlad? I mean, you're in a slightly different business, but did you look at a universal model? Yeah.
Yeah, there are some echoes there, and actually, maybe just harking back to how Alessandro started. How do you get into a study? Study and study and study is the first thing. I actually had the moment where I had to stop studying, go, right, I'm either going to carry on studying or build the business. So what happened with me was I had been looking at problems within the film entertainment and TV space and seeing some of the challenges and exploring ways of fixing that. And there was a moment actually where I looked at one model with a US version of the business where the law had been passed, Title for All the Jobs Act, but never fully implemented. So there's a moment where I'm like, let me see what's happening in the world. And I was bouncing between Silicon Beach and London and Old Street. And I kept going to these networking pop-ups around blockchain in its kind of earliest forms back in like 2016, I think that would have been. And going, oh, this thing inherently fixes some of the challenges I've been looking at around transparency, around automation of processes and contracts, and around trust, because I don't know how much people watching know about film, but it's famously seen as a very risky investment because there's a lot of, let's call it smoke and mirrors to be polite, and lots of producers whose movies supposedly don't make money but are driving around in $200,000 sports cars. So there was a challenge that needed to be fixed. So I looked at it was because my background is in content creation originally. I basically went, all right, I'm not being an entrepreneur, I'm being a journalist, and actually a bit like we're doing here, I was doing hour-long conversations with different people within, let's call it the new fourth economic paradigm, to explore what was real, what was interesting, what was kind of bullshit, what was maybe naive if worthy. So I've been talking to people who are doing early versions of DAOs, talking to people looking at medical research. I was talking to refugees in refugee camps in Indonesia who were looking at blockchain and how it might help their solution. Fractional ownership of our, various other subjects to explore. I think the challenge for me around our space is we're not crypto for crypto's sake. We're about, there's a problem within the film and entertainment space, or the business of making movies rather than the creative side of it. And those people aren't interested in crypto. They're not interested in crypto. They're not interested in kind of new, different ways of doing it. They just want to get their movies made. They want to do it as cheap as possible. They want to put as much money into the screen. And above all, it's a hit-driven business. It's really volatile. So the challenge for me was looking at blockchain, and it still is. It's a volatile business. So how do we kind of take out volatility but keep the advantages for our audiences? And that was an interesting task in seeing how we built our model. And that, it's evolved over time as market sentiment changes. But essentially, for us, blockchain has two kind of benefits. One of which is the actual technology, actually what it allows and how it improves systems. And it's also, the future of how the market is going. But secondly, actually, I don't want to say it's marketing, but it's like a statement of intent saying we are about transparency. We are about, clear auditing. We are about sharing information that needs to be shared. And blockchain to a certain extent, as well as physically doing it, it intellectually lets people around knowing, that's your intent, that's where we're going to. So we want to bring in, let's say, better business practice, and blockchain is part of that story. And Tgrade especially, I should probably add, when we've been looking at chains, and we were a little bit agnostic, what I really liked when, we first started having conversations, Martin, was your business inherently works the same way as the film industry works in terms of trusted circles, in terms of self-sovereign regulation. So to me, it was just a slam dunk that it's like, oh, it's how we work and it's what we need to fix, and you're doing it already. So why try and reinvent the wheel? And I'm not a technologist. I'm a person, my domain expertise is media technology. And I think part of the challenge for that, for me, is people operate differently. Technology is primarily a data industry. You're looking at data and facts. And film and entertainment is primarily a relationship-driven industry. So it's about that trust in a trustless environment. I think I've spoken enough.
No, that's great. Yeah, it's interesting how you touched on things like trusted circles. So, the story behind that was I was very much focused on regulated businesses because that's my background. I came from capital markets. And I think what's fascinating is I'm talking to you two here who are not necessarily regulated financial businesses. You're film finance, or the business of funding movies, and you're in the business of last mile delivery. So that's actually, it's been a pivot for us, but the ground principles of why we built what we did are applicable to any business around the world. You need to know the identity of the people you're dealing with, which, public blockchains isn't a given unless you create your own mechanisms to do that. And the reason identity is important is many things. What's the origin of funds is often a question that businesses need to answer for, because there's the whole pressure on anti-money laundering and know your client and know your transaction. That's universal.
Especially in film, which is actually used to avoid some of those regulations at times. So
yeah,
I think
exactly.
The other thing that for me is interesting, Martin, is how Alessandro and I have very different approach, or different kind of business cases insofar as, and correct me if I'm wrong, Alessandro, you're very much about helping and fixing people in the real world with let's say, who have physical jobs and physical routines that need payment. Whereas we're very much about a web of contracts, and contracts with rights and obligations that get triggered, for example, when transactions happen or other elements happen. So our business inherently is it could be people and offices, but really we're doing digitally what used to happen with bits of paper and signatures. So in that case, in that sense, it's very different as well.
But again, the similarity. Sorry,
No,
go ahead.
I think the approach that we used was, how do you make people as productive as possible without, well, using information technology?
Okay.
One of the things, what are the barriers to entry? I'm going to correct Martin. Transportation is a regulated industry, just like consumer products are regulated industries. All industries are regulated to one extent or another. They're just not financial regulations necessarily.
Mm-hmm.
And what attracted us to Tgrade was the trusted circles element, because if I'm doing deliveries, let's say food deliveries, I'm not earning millions and millions of dollars necessarily. I could be, but I'm not. And one of the nice things about the trusted circle element was that you can have these trusted circles at different, we'll call them administrative levels. So you can have them at a local municipal level, you can have them at a state or provincial level, at a national level, and you can then start to organize people according to those different levels of administrative interaction and create tax off-ramps. So essentially, with the smart contract structure, not only can people provide the service, provide it in a secure manner through some kind of security system, whether it's escrow or an insurance product or something in between, you can possibly manage it through a token, giving them ownership, but you can also create these tax off-ramps, which means that their administrative burden, which is usually quite consequential, can be completely automated and completely transparent. And the tax authorities can go and audit it whenever they bloody want to, and leave the citizens alone so that they can get on with their business.
I think transparency is a really, it's where the wider world is going, let's put it that way, as well as business. And I think the fact that, blockchains, and Alessandro, what you're doing, there's, I think in general in the world of business, I think there's a little less smoke and mirrors as there used to be, and a little more honesty about what's going on in the background. And I think that's a shift in people's mentality, as well as what technology kind of enables, I think. One of the, for us, people are always talking about, well, how do you get people to use your platform? And for us, if you're looking at an investment choice and you have better due diligence and better oversight over the contract terms, what the returns might be, that's a safer investment. And, I'm sure we all know kind of high net worth individuals, they're always aware that when you make an investment, there is a risk. But actually what they don't want to happen, what they really hate is being ripped off. So, oh, it didn't work out. Yeah, it happens sometimes. You rip me off, okay, I'm not a happy person.
Mm-hmm.
And it's a very, very similar debate that's going on in the ESG space as well. What is the real, the weighted asset price when you put the risks in? And, if your portfolio is very risky, you've got a lot of exposure to dirty fossil fuels, whatever it happens to be, then, like credit risk is going to weigh in your portfolio. And exactly the same debates happening about transparency and what do we really mean by green risk now?
Well,
Yeah.
that's one of the nice things about using using this technology is you can, well, I call it the internet of value, but you can see where that value in the product that you're buying or the service that you're buying is coming from.
Mm-hmm.
If the person or the entity that you're interacting with is telling you that they're using green energy, and you can look on the blockchain and you can see that they're buying energy from a coal producer, that it's not true. And you can sanction them. You can say, I'm going to take my business to somebody who's actually doing it.
Mm-hmm.
But
yeah.
It also allows you to create, we'll call them newer economic entities where you can, anything that anybody values and has enough liquidity in the market because there are enough people who value it, can actually be put on a blockchain. So if you're doing business with an entity that says that they support veterans, LGBTQ, plus all the other letters that go after it, people or diversity or whatever, you can look on the blockchain, and if there is a chain, if there is a network where that value is being exchanged, it's being represented, you can actually integrate that into the product, into the value or the price of your goods and services. You can actually see it. You don't have to, what is it called? I think there are companies that are called purpose-driven companies. I think that's the term. I'm not sure.
Yeah.
There's a sock manufacturer here in the U.S. or a sock producer here in the U.S. who says, all of their socks, you buy a sock and they'll give a sock to homeless people. But, they're selling you a sock that's, colored, it's got a certain design on it. Then they're dyeing them black and giving the black ones to charity, which is fine, but, they're eliminating the quote unquote value added, or most of the value added that they bring and through their design in what they're giving to somebody else. But you have to believe them that they're actually going to give one sock for every sock that you buy. Whereas if you've got a network, an information network, you as the consumer can actually go and look and say, yes, they're actually doing it.
I think one of the things you touched on there, it's about, are they telling the truth? And for me, one of the things we've had to think very deeply about is what's on chain and what's off chain, and making sure you get correct information. I mean, for example, if you've got, for example, using the blockchain to track a real good, if like the green energy you spoke about, if that information isn't on the chain, that actually they're buying from cold buying, the system kind of goes apart. So for us, it was really important to look at a solution that looked at the whole value chain. And it's part of the reason why we kind of went, well, to kind of onboard projects, we've got to start at the start of the value chain rather than maybe the end of the value chain where there's more money, to make sure actually that we're not doing that old adage from the early days of the internet of garbage in, garbage out. So
I thought that was still relevant.
That's very true.
Yeah.
So, for us, one of the challenges around film especially is that it's not typical in terms of returns to investors, because you're not really taking a dividend on profits, but it's they've got something called a revenue waterfall. So you're essentially, everyone's a profit participant in the project, and they start with banks that may have liens and take first dollar revenues, right through to maybe smaller investors that sit at the end of the chain that only get a share of what they call net profit, which is profits after all other costs and commitments are accrued. And they sometimes, things like that might include the pay of an actor who then takes a lot of their money afterwards. And there are some famous examples that I may got the figures slightly wrong, but I think there was a movie called Yesterday, which the industry assumed has made a $45 million profit, but actually the studio claims it made an $88 million loss. So if you're last in the chain of the net profits, you didn't see any of those returns. And you see even movies like Harry Potter, they take $1 billion at the box office, but according to studios, they weren't breaking even. So the truth of information is important. That's why for us it was really important. Film essentially is created by a web of contracts, and if you've got one contract here that says, well, you get 3% of here along the revenue chain, but you're not aware that here before in the process there's a contract that diverts the funds away from you, you're being ripped off. Essentially, you're being ripped off. So that's why it was important for us to have a whole web of contract, to have transparency along the whole value chain, and know, oh, actually, if I put my money in here, this bit's going to get diverted here and this here, and these are my likely returns. And not only does it help you understand the risk of the investment, I think it also encourages better business practices. Because if you're a producer looking for investment, people aren't going to go to the projects where, you know, the money isn't going to come back to them. They're going to insist on, like you were talking, Alessandro, maybe standardized contracts where there's more clarity. So it's, but you know, you're using basically best practice contracts. And with us also, it's very important for that reason to work with what we call the gatekeepers. So a typical movie is probably 2/3 funded by equity and 1/3 in soft money, so gap financing, tax breaks, etc., etc. And those, you know, banks giving you, you know, debt financing aren't interested in risk. They want to mitigate risk, which is why they take, you know, liens on first dollar revenues, and why, you know, if you want to borrow money from them, it's about, you know, give me transparency. If you're not being transparent, why would I trust, you know, why would I trust you with my money? So the helpful part of that as well, I think it democratizes access, because right now, if you're kind of outside the industry, it's very hard to break in because you don't have those personal relationships with the banks that prove evidence. If it's on chain, it's a lot clearer and a lot easier to see, even if new entrants are behaving well or badly.
Mhm.
I think what I like about both your models is, having spent ages researching it, like many years between you, your particular businesses and flows and the opportunities and where the contracts and transparency comes in, it's not just about solving it in one market, in one jurisdiction, is it? This applies as a template that applies to every single corner of the world that produces films or that needs to deliver something. You know, your model, Alessandro, works perfectly well in New York for delivering a pizza, just exactly the same as it would in, you know, delivering a radio to the outer parts of Kazakhstan. It's the same principle and the same kind of contract, except in Kazakhstan it might get delivered by a yak rather than a moped. But you know, it's still that same model, isn't it?
I thought they had a lot of oil in Kazakhstan.
Yeah.
And gas. Yeah, I think actually Vlad touched on something that's very important to me personally, but I think also to Fabrizio and to the guys who worked on the project. Once you get really close to, we'll call them the non-accredited investor, to the individual, to the person who doesn't have, you know, the connections, the sophistication, so on, you can run into trouble. Yeah, in a last mile delivery, for example, you know, big companies, they tend to want to use subcontractors because the subcontractor allows them to de-risk their processes, unless they have enough concentration in the market where it's worthwhile putting their own staff in. But with like platform companies, internet platform companies, you often get into this discussion, sometimes in front of the courts, about whether the person is really a contractor or are they really an employee. Yeah, how much influence is the platform owner exerting over the way that these people behave? Whereas with a crypto or cryptocurrency network, the producer, as I like to call them, maintains a very high degree of agency in how they do their work, because the contractual part is taken care of through the smart contract, through the protocol of the network or the network protocol. But how they do that, how they do their work, is entirely up to them. And that actually allows people to bring their own value to the network.
Mm.
And that agency, that ability to do the work the way that I see fit, is quite empowering. And yet having the security that the software provides to you to allow you to do that is, it's a very appealing trade-off. So whether you're in Kazakhstan, delivering with a yak, or delivering with a truck or an electric bicycle, really doesn't make any difference.
Yeah.
So, you do what you want to do. It's perfectly fine, as long as you're providing value. If your clients are not perceiving that value, well, then you're buggered.
Going back to your original question, Martin, we're very different insofar as, we're not necessarily about people doing the same thing in the same countries, but actually, essentially, each of our projects and movies, they tend to be transnational anyway. So to explain it, most movies, even if they're, it might have Warner Brothers or whatever at the front of the name, they tend to be special purpose vehicles of various parties coming together. When you see the beginning of movies and you'll see like 5 different banners, so they're all basically partners. So each project is a special purpose vehicle. It's essentially a joint venture. So, you may well have, money from Germany and Malaysia shooting a movie in Ireland that officially is a US LLC. So that's why the notion of self-sovereign regulation is really important to us, because it's really hard. You can't go, oh, these are the laws in the UK, these are the laws here. There has to be an element of, these trusted circles, people you work with that are looking out for each other, or keeping each other in check and making sure they do follow regulations. Obviously, KYC and AML is very important in these kind of projects, especially so because sometimes these movies are investments to make profit, and sometimes actually they're designed to be tax write-offs, which some people may look as weirdly. Sometimes it's about tax planning. Sometimes it's about going, hey, I want to make a documentary about yak delivery men in Kazakhstan. That ain't going to make a profit. Oh, that can help me with my tax bill. So, there are different motivations there for working on it. So it's messy, right? It's a really, making movies is an agile process. You constantly, different things are juggling and falling down, and you just got to grab them. So Crank's a system that is flexible, but, as you were talking, Alessandro, about that backup, that knowledge, that safety, I think blockchain helps provide that kind of net of, there's an infrastructure. So, the more that you're organized with these really solid bits of tech, solid contracts, self-sovereign circles, transparent auditing, transparent transaction, following and tracking of transactions, the more you're able to then kind of play fast and loose with the other areas, be that creative, be that, getting financing, be that minimizing the amount of money you spend on lawyers, for example, which can be quite a burden.
And accountants.
Yeah, that's one of the things we're trying to work out, who we're disintermediating. And we're like, well, your accounts are there live every day, up to the minute, rather than, oh, we did an audit 3 months ago. We spoke about the returns on the film, and, they can, right now, because there is all this accounting that needs to happen, a movie might start making money 2 years after you've invested it, and then you don't see any money from that project for another year, whilst they work out, who's getting what money, what do we owe where. So it's it's a risky process. Some people call film a lifestyle investment. But I should also add, we're not just about film. One of the businesses that we spoke to was actually a major Hollywood studio. And you're like, oh, you don't need to worry about shady producer trying to shave an extra 10% off here and there. And then you realize, something like a big HBO show might well be a $100 million co-venture with Sky. So you've got Warner Brothers and Comcast, essentially, both with really, hot accountancy teams, both looking at every little line of the figure. And we bring some transparency and trust into the process with those guys as well.
Mm-hmm.
So do you think, like, both, a question to both of you, you're both probing business models in your area, and it feels to me like it's a first step. What kind of things do you think we're likely to head towards? Like, we're obviously going to be developing new business lines here. This discussion has been about transnational, applying models to different countries, where traditionally you'd start off in one country, you grow, you expand, you export your model, you adapt it slightly for local circumstances, but you still got that command center in HQ in whatever the country you started in, unless for some reason you have to relocate your HQ for whatever reasons. But it's that command and control model is how generally businesses, multinationals work. So we've got something a lot looser here. It feels like, you know, the glue's held together with the technology rather than a whole set of protocols and hierarchies and legal entities around. Is that a fair assessment, or do you think it'll evolve in something completely different?
Well, I'll take that first, if that's okay. I always look at things from a historical perspective, and with the introduction of information technology into the enterprise and inexpensive communication through the internet, there's a process of disintegration or disaggregation of companies that has started back in the, we'll call it the 80s for lack of a better timeline. Certainly into the 90s, it started to become much more prevalent. I think that this technology allows for that process to continue, where you're essentially taking the company, the legal wrapper, if you like, and flipping it inside out. So all of those services, all of those processes that create the value added within the company are now on the outside and are governed by their own networks. And you can just tap into, you know, whatever service or you need. In a similar fashion, you know, those assets that used to be wrapped up in the company, oh yeah, they can still be wrapped up into a company, but they will be exploited through a network, through a smart contract. So if you have, I don't know, we'll call it a trademark or a patent. Patents are probably better, but no, a trademark works too. Or a factory. You know, you can, you know, whatever that productive entity is, the way that you're using it within a company, you know, might allow you to create, you know, 1, 2, 3, 4, whatever products or services that are available to your customers. But if you put it on a blockchain, on a network, well, maybe it might be producing, you know, 100 different, you know, products and services, because everybody can use it however they, you know, in whatever way that they want, as long as it conforms with the terms and conditions of that usage, which is one of the problems that we have with NFTs. You know, NFTs are great, but, you know, what are you actually getting? Nobody really knows. And the value of the NFT market, I think I read the other day, has gone down 97% since its top. You know, but that was foreseeable.
Yeah, a lot of NFTs I think are almost like collectibles rather than investments. But I mean, maybe picking up on your question, Martin, my view on it kind of echoes Alessandro's, but I look at it in a different way, and there's two parts to that. One of which on a let's say, well, there's two areas, right? First of all, it's gatekeepers. So I think one of the challenges in any business right now is there are gatekeepers in movies, it's producers, it's banks, it's people with large amounts of capital that can drive a project forward. And, you know, I think one of the things that blockchain help, and it's the way that business has been moving forward anyway, even before blockchain, is kind of loosening those gatekeepers. Technology made things cheaper. You might need less lawyers. Banking's cheaper, Forex is cheaper, all those different areas. So there is, as Alessandro said, a loosening of those kind of shackles on a business. And I think that's one force that's going through it. On the other side, you know, this was especially true when I was working on that documentary project I told you about, you know, Radical Transparency. And you talk about all these advocates for decentralizing businesses. And to me, if I look around now at especially the more crypto side of blockchain, you see that actually power is aggregated in exchanges, right? How actually decentralized is it? Because there's a small number of people that can kind of control the market. So I think for me, in my kind of philosophy, is I'm never an absolutist about anything. So I think decentralization is useful. Things decentralizing completely, it is not. And I think one of the reasons for that as well, for me, is it's about kind of how humans are, the human spirit. I was talking to some kind of really radically decentralized businesses that are operating almost like co-ops. And it's the same as when you're making a movie. There's got to be a vision and someone driving a project forward and understanding. And if you have, 5 different people in a fully decentralized cooperative all pulling in different directions, things can atrophy, they can stagnate, people walk away from projects because they're not doing it. So I think for me, it's about, you still need people with ideas, still need people with drive and vision. But that can be looser, right? So for me, the way I imagine the industry, I'm servicing will change is different projects will get made because audiences and filmmakers might be able to connect more directly without those gatekeepers deciding what projects get made. It could be that there's more money flowing into the market because whilst we're a B2B business, if you tokenize ownership of a movie, you can start offering, say, fans, a $200 token towards the next project from their favorite artist, creator, what have you. So I think in those sense, we're loosening it, but you still have a studio distributing a movie. You'll still have a director or producer doing that. You may have a storyteller, someone who writes books or whatever, control their stories, and they're all individuals, right? But it's allowing those people to work together on a more level playing field. And I think that's one of the things that really helps, but it's not really decentralized. It's just less centralized than it was. And, and that's reflected in the way we run our business where, yeah, we work a lot from our laptops, but we still essentially go hubs. We're going to need people in LA sitting, having coffee with other people in LA making movies. The same in London, with the city as well. Yeah. So we're not one central business, but equally, it's a hybrid.
Yeah, I was discussing this yesterday with a banker saying, what blockchain can do and how we're going peer-to-peer and all that kind of thing. But then we also were saying, well, do we have time really to make all these decisions if we're fully peer-to-peer? Because, I mean, just look at the crypto market. I don't know how many thousand coins there are. How do I know which one to buy? I would probably quite happily give someone some money to say, look, sift it down, give me a little portfolio and I'll invest in that rather than me having to do all my research and due diligence every single project. And it's kind of, you'll still have some forms of intermediary somewhere. Just, you need people to do analysis. You need to pay them to do that. You need
Martin,
people to...
You just described our business model for investors.
Well, I think you're both touching on an important point. Are you leveraging the distributed ledger technology, or are you actually developing an economy with it that's driven by a currency? And
I think you're leveraging the technology, and you're able from that to be able to pick and choose how you interact with it, what parts are important to you. So at the moment, you don't have any choice.
Well, those thousands of tokens that you're talking about, you can find on CoinMarketCap, a lot of those are just not cryptocurrencies.
No.
They're securities, and they will be regulated, basically out of existence for all intents and purposes.
Yeah.
The use of a token to, dare I say, cover the risks or help mitigate the risks inherent to the system, to the network, is something very different than using distributed ledger technology per se.
Yeah, I mean, I agree with you, Alessandro. I think our model does 1.5 of what you were saying, because we aren't creating cryptocurrencies, even if we might accept it as payment. All everything to do with tokens in our business is essentially it's a representation, like, which could be, you know, equally be a share certificate, for example. So we're only about asset-backed digital, you know, digital ownership formats. But for us, it's, you know, both elements are important, because for us, DLT creates data-rich, transparent, auditable investment opportunities.
Sure.
And I don't call it crypto, let's call it, I don't know, Web3 fintech, digital asset ownership, creates a way of bringing money into that market, into those investments. So for us, it's two tools for one end. And, you know, without kind of ranting on too much about my weird branding thoughts, we're called Stellarator because Stellarators are hot plasma controlled by magnets. So we're bringing two elements together, which basically Stellarator creates nuclear fusion. We bring two elements together to unlock exponential power. So for us, those two things we spoke about are two elements, and we combine them in a circular economic loop so that there's, you know, more transparency, less leakage of funding, better data knowledge, and it just becomes a virtuous circle of improved data, improved investment opportunities, improved operational systems. And I think that's only really possible with you know, DLT and blockchain combined with kind of AI insight into those learnings, or reinforced machine learning, I should say.
Yeah, they're always going to, you know, you're always going to have different tools for different uses. You know, that's just the way the world is.
Yeah.
But I think Figaro's ambition is to actually create an economic system, an economy. Which is why we put a lot of emphasis on the escrow mechanism. But, you know, it's a misnomer, but it's conceptually it's the easiest way to communicate it. The token becomes the insurance market. The way that you access the service is through the security of the insurance market, which then allows you to create or to add, you know, other forms of transportation. You know, you can start off with food service delivery. You can migrate to the whole category of local delivery. You can then start doing, you know, greater distance delivery, road, truck, rail. But, you know, you can potentially, you know, if it gets sophisticated enough, you know, you can add, you know, planes, trains, boats, you know, whatever the heck you want, you know, whatever it is that's being sure, automobiles, or, you know.
I just referring to the movie title, Planes, Trains, and Automobiles.
Yes. That might be a little dated for some viewers. Unfortunately, we're all getting along up in age there. But you know, you could potentially add it to the Hyperloop. But, you know, the way that Figaro is conceived, you could also apply it within just the confines of a restaurant. You know, a waiter who's bringing your food from the kitchen to your table is transporting. Sure, you know, they have a bigger role, but, you know, there's a service that's provided there of transportation.
I think picking up on what you were saying, Alessandro and Martin, I think what's the opportunity for businesses like both of ours is being first into market. We're creating these kind of economic structures, you know, you with your economy, Alessandro, us with a tool set for any contract driven business. That means you expand into different areas, you know, and if someone else who's a domain expert in VC or commercial retail, whatever wants to, you know, they might develop their own system, or it might be no one else has done it. Our systems are there. Let's just scale it to the next area. And that's one of the great things about being an early stage on the platform, is it gives you those kind of exponential opportunities as well.
So all the lawyers that you're going to put out of a job are going to turn into software developers, because they're going to have to write software
Do you know what?
contracts.
I think the lawyers will still be there. Just it might be like, if you're low budget, you take our standardized contract. Otherwise, a lawyer sits there and they charge you for 1 hour, not 5, because half of it is up there. So
Yeah,
no, I
but,
think there'll be
they always
incremental
take
changes.
it. They always take a template and then just sit there and change it at the margin and charge you lots of money for it.
Yeah, for a Google search.
Business model that I'm not really a fan of. I prefer litigators, but
Well, to be fair, the parallels between software engineers and lawyers is extremely close in what they do. They're very pernickety about details. They take templates, they adapt it. It's the same sort of thing.
sure.
I should add, my business partner is a lawyer and tax specialist, so I know the story.
Yes. Well, the nice thing about this technology is that it also gets rid of the accountants and taxmen, potentially the taxmen.
Yeah, I am. Oh, noise outside. Sorry about that. I think what's going to be interesting for me is seeing how automated, business running. Obviously, DAOs in the really earliest days weren't really about investment. They were just about companies that ran themselves, pay their own tax. They essentially fully automated businesses, and I'm intrigued to see where humans remain and people making choices. Or with us, for example, we're looking at when are people happy to make automated payments and when do they want to control when a payment goes. So I'm intrigued to see where automation takes off and where automation just business owners don't want to go there or clients don't want to go there.
I think there's also a regulatory element to that, because I know regulators are very keen to have an accountable person within a business. And if you have a DAO, who's the accountable person? And do they really carry everyone else? So that's one of the hotter ones, I think, when you're looking at DAO structures.
Yes, but is it a DAO or is it just called a DAO? There's
Very true. Yeah.
A lot of these companies or a lot of these organizations that call themselves DAOs or decentralized autonomous organizations, for those who don't know what it means, they're not. I'm sorry, they're just not. And I think one of the things that we tried to do with Figaro was that because you are autonomous in your interaction with the software, you have your own agency. You can do what you can do what you want. You can use the contract, you can fork the contract, you can modify, you can do whatever you want. You can, you're actually part of a DAO because you have this autonomy. And the software, should we be able to fulfill our ambition of making it, we'll call it an automated insurance system, for lack of a better word, the software is autonomous as well.
Yeah.
You don't need to ask anybody permission. You don't need to get anybody's okay. And the service that you will be provided will be secured by the way the software executes. Anything that falls short of that is not a DAO. Yeah. So for a regulator to say, well, we want to have a DAO in a legal structure, like the Lummis Gillibrand proposed bill, it just shows that they don't understand what a DAO is. Or for MICA to say, well, we have to have somebody that we can interact with, within the European Union, when you have a completely distributed, decentralized system, is just a misunderstanding of what the technology is and how it can be used. Because you're just going to, someone's just going to fork it, and they're just going to go and do it elsewhere. And you, as a regulator, you're just going to keep running after them. It's just not going to work.
But I think there might be a moment, though, if if you're an individual with money or you're running a business, sometimes a lot of those, like Figaro, there are people on the street, right? There's going to come a moment when your consumers are somewhere, so the regulation happens that way. I think, you know, to me, it's really important when I look at the, you know, I said it before, Emperor's New Clothes. What is possible versus what are you going to be able to do, especially when regulation starts coming in? You know, especially Uber seeing that a lot with its drivers, right? In some territories, they're seen as employees. So for us, it's really important. Yes, we're idealistic. Yes, we want to democratize, you know, processes. We want to level the playing field. But, you know, you're not going to change human nature, and you're not going to change the entire planet and how governments work. So, you know, it's about navigating that. And I think that's where you're going to see other businesses fall down and become very successful. It's with that human element, right? So, and you see the same right now with chains that, you know, some of them have been managed badly, or exchanges, and they're the ones that go down. And ultimately, whatever the technology was, it's the ones that were managed, let's say, more professionally, better understanding of risk, are the ones that are moving forward and surviving and thriving.
Yeah, I think you touch on an important point there, but it's more philosophical in nature as far as I'm concerned. You know, when you're talking about you know, a legal entity, you're talking about segregation of assets. You know, can my you know, can a, you know, if the legal entity goes into bankruptcy, you know, can the creditors attach my assets, my personal assets? And, you know, how much distance is there between my assets and those assets?
Yeah, and that's important for us because, you know, we're looking at our corporate structure for those reasons. What are you allowed to do in what country? Which bit of the business sits where as well, to pick up on that. So it's not just different assets and different units, but different obligations. I think it's important to add to that.
But when you know, the way that I see the cryptocurrency model is the assets are on the outside. So that regulatory or that legislative paradigm that we've used for the last, you know, 2,000 some odd years, if not longer, you know, just doesn't apply. And trying to somehow scrunch, I don't know, you know, force these entities into that kind of framework through legislative fiat just doesn't work.
I think what's important when we're really considering DAOs. I mean, we did do a podcast on this about, I think DAOs have to have strong constitutions, and, you know, there's, along with rewards, there's also responsibilities. And if you breach the regulations that you create around a DAO, then there should be sanctions, and there should also be you know, room for appeals, for dispute resolution, all that kind of thing that a lot of DAOs don't really think about until it happens. And then there's squealing all over the place of propositions go up and votes go on, and panic, you know, when they could have really sat down and thought about all this before. So that's, I think, a big challenge for the DAOs, not just, you know, the taxation, law, legislation, but actually the self-governing has to be strong.
Yeah, well, you know, the culture, you know, the common purpose, common values, common tooling. You know, you're essentially talking about a culture.
Yeah.
And or I call it a culture, at least. Some people disagree with me, like as a company. But
Yeah.
you know, which is where branding, I think, plays an important role. And, you know, you see that often there is a legal wrapper around the brand. And, you know, there's also litigation around that wrapper because, you know, unscrupulous people steal other people's brands because they're unscrupulous. But, you know, I think the Bitcoin community, to a certain extent, but probably more the Ethereum community, you know, there is a very, very strong brand presence, even to the point where, you know, they've gone in and sanctioned people for using their trademark, you know, when, you know, because they haven't been consistent, we'll call it, with the brand charter. But beyond a brand charter, they're just not consistent with the value system. And they've sanctioned people within the court system.
Yeah. I mean, I'm intrigued to see what happens this year. Obviously, there's been a lot of change, but it does feel like we're on the cusp of kind of blockchain and DLT becoming much more, getting much closer to the center of, let's say, the current real world economy. Whereas I think right now, a lot of crypto is it's in its own little bubble. It's crypto enthusiasts talking to crypto providers, or blockchain enthusiasts to blockchain providers. And for me, it's the challenging part of looking at the technology here is how do we break into the mainstream, right? Especially in our area, you don't want to watch a movie by some crypto bro thought, oh, this is awesome. You want to see the new Chris Tennant movie, you want to see the new whatever else. So to a certain extent, you have to go and talk to them in their language. And I see that more and more happening. I see that with businesses on Tgrade. But yeah, I mean, for me, that main challenge also is to a certain extent is that hiding the blockchain, because it's really user unfriendly right now, or it can be. And it's about, just making things a little simpler, using mainstream language as well.
I have to agree with you. I think that's the big opportunity. There is a lot of movement by different governments here in the U.S., from the president on down. In the European Union, there's been quite a bit of government action in this area, and I think it's not by chance.
Yeah,
I think that there's a recognition that we're basically stuck between a rock and a hard place in terms of our economics. And personally, I think that one way out of that is to use this technology for to get us out of this situation, out of this high inflation environment, through the productivity gains that you can get from this technology, which are quite significant. Not only getting rid of the accountants, the lawyers, the compliance officers, and so on and so forth, but also the take, if you like, that the central operators, that the platform companies are taking. If I look at the food delivery industry, 35% is going to the company, and the consumer is having to pay that. The consumer is paying that through all the little fees that are tacked on to their bill, plus their tip. But those restaurants are also actually increasing their list prices, their menu prices for in-store dining, which is contributing to inflation. So if we can take that cost component out, or all of those cost components out, using a smart contract like Figaro, that helps bring down inflation. It helps increase productivity, redistribute wealth on a more equitable basis, and theoretically, with increased productivity and redistribution of wealth, you can also address, well, we'll call it short-term or long-term debt cycles, because you don't need to use as much debt in these types of systems, or any debt at all, if you're using.
Well, I think we'll definitely see some new financial models, because of what this automation allows you to do. You can do a lot more future revenue type of funding. So you know that this is a solid delivery platform mechanism using smart contracts. What the revenue is likely to be, and instead of saying I want to borrow a load of money to invest or upgrade whatever, just say, well, we'll take it off future revenue. And because it's transparent, it's very, very open, you know how it works, that then becomes another way of financing things, not necessarily through debt.
It also gets factored into the price of the token if you have a token-based economy, which, again, to use a Figaro example, if we are able to develop this token, and that token does capture the future value of the network, and the network is expanding because it's integrating other multimodal transportation, those delivery people who are the ones at the bottom of the economic ladder, will see the value of their tokens increase, which means that once you have robotic delivery systems, they'll have the value, the assets to acquire those machines, which means that now the robots are working for those people who used to be at the bottom of the scale. That's a very appealing, it's a very appealing view of the world that, I think legislation, whether it be on one side or the other side of the Atlantic or even elsewhere in the world, if people are thinking about this as a solution to the high inflation environment that we have, to these productivity, from these productivity gains, it becomes very appealing.
Definitely.
I think that's one of the things I looked at when I was working with documentary as well, is, you were talking about it's, redistribution of wealth, or it's about, if you've created value for a business, should that be reflected back? And the other, not really anything we're doing here, but I'm wondering about blockchain and ownership of data, and how people might be able to get better value from their own data as well. But I guess that's a conversation for a different.
No, actually, with Figaro, we've addressed that, because you can store your data on the blockchain, using different technologies that exist, or you can store it in a centralized database and access it through tools like Ceramic. I don't know if they would necessarily work on Tgrade, but tools like that, which then allows the participants in this network, whether it's the delivery people, the restaurant, or the buyer, to manage their own data. And through the use of that token, or through the use of a smart contract, they can then monetize that if somebody wants to get access to that information, whether it be for advertising purposes, for business development. Doesn't make any difference. There is that possibility, because we can save that data in such a way that the data owner derives a benefit, because there is no central operator.
What we'll see, actually, instead of what we witness at the moment, like with ad brokers and the murky world of information sharing that happens that we don't really know about, is that we'll probably end up with a system of licensed algorithms that will just trawl around all the different sources of data by permission, do their calcs, sums, machine learning bits, and then they'll go off to the next one. So the data will just stay put. These algorithms will roam around, trawling, mining, collecting, summarizing, doing insights, and then you have things like that, but you never actually lose control of where the data is, because it's in one place and it never moves.
Well, also, if you have AI and machine learning algorithms that can help the user to monetize their data, it also gives you a choke point where you can actually say, no, I'm not going to give you access to my data. So if the AI or the machine learning starts running amok, everyone, you got a kill switch.
Yeah. Unless you live in certain regimes, in which case you have no kill switch.
Wow. In which case you're buggered anyway. But
yeah. Good. So I'm conscious of the time. So what are the final thoughts on where business embraces blockchain? I think we've touched on many themes today about, you know, that the end consumer doesn't need to even know it's on a blockchain, that these tools automate, they're fairer. Any final thoughts that you've got, Vlad?
I mean, I think for me, the big change is, and you know, I'm spearheading it, is using blockchain and crypto to service other industries rather than it serving itself. I think is the change for me. So it's not, you know, cryptocurrencies for crypto bros, but it's, you know, digital assets moving into the mainstream.
Fantastic. Alessandro?
Well, I'm gonna echo Vlad, but I'm gonna change it a little bit. It's technology at the service of people.
Nice.
It's you know, unfortunately, you know, I come from I have a very strong Florentine Italian background, and humanism is very important. Common good is very important. I was weaned on that as a child. So every business I've worked in, every business I've been involved with has always focused on trying to do the most good for the most people. I think Figaro does provide that opportunity. And, you know, Fabrizio, he's from Naples, but I'm sure
He'll forgive you.
he might forgive me. He might actually approve, but I don't know. But, you know, I think he'd support that view.
I support you on that whole philosophy. I've been a great fan, having spent the last few years really looking deep into how commons, mutuals, and all that kind of thing works together. And it's a nice third way, so not raw, complete exploitative capitalism, not central planning of the other mechanisms, but somewhere in the middle where the people control how things are done, and those people in charge the closest to doing the business. In case of couriers or movie makers, they're the ones in charge. They know the decisions. They can take control in some ways of how they operate and create a rich ecosystem around uniting people with a common purpose.
Yeah, and I think you spoke about agency through the tools of blockchain, giving power back to individuals.
Well, I actually go a little further to the left, guys. It's Marxism in its purest form. You are the means of production.
Yeah, so I mean, social impact is important for me, but for me, it's about also just helping storytellers, getting stories out, and kind of democratizing storytelling. But you do that through democratizing the finances behind it.
Well, I think we're done here. Yes,
yeah,
we can
It's been a
call
great
it.
conversation.
Yes, very good. Thank you very much, gentlemen.
Thank you very much. Thanks very much for being
very
invited.
enthusiastic about the future.
It's bright.
That's bright.